OpenAI is laying the groundwork to go public in an offer that could value the company at up to $1 trillion. That, according to Reuters. For more on this, we're joined by Jay Bala, Senior Portfolio Manager at AIP Asset Management. Jay, thanks for joining Nate and I. Let's get your initial thoughts on this idea. And is it realistic? They're talking about possibly for next year. Is that realistic?
Yeah, no, just with regards to OpenAI, I realize, $1 trillion sounds like a huge number, and it is. But the point with OpenAI is that, it is one of the fastest growing companies in the world right now. It is the maker of ChatGPT, which is one of the fastest growing apps in the world. And as this company goes public, it will go into certain indexes. It will go into things like the S&P 500, the NASDAQ 100. And so, there is actually upside from where it is today. Like even at $1 trillion valuation, which I realize sounds like an extraordinary number, there is still room to grow.
And is there any concerns that the appetite for AI may change by then?
No, I don't think so. I mean, look, I think AI is here to stay. I think it is as important as the internet was, back in sort of the 90s and the 2000s. And, if you look at, the concept of sort of, I guess, valuations, things that gone up and down over that period of time. But, people that had bought Amazon, in 2001, even though the stock was down significantly, would have probably stood to gain very, very significantly in the coming decades, right? So the internet never really stopped growing, even though the stock market came down at one point. And I think AI is pretty much the same thing, right? I mean, I think AI is here to stay. The valuations may go up and down from here on out.
Jay, how worried are you about just the level of hype that we're seeing? Do you think these deal transactions, these large deals between these big companies, is that sounding the alarms as being excessive, or do you think there's realism when it comes to the size of these activities that are happening within the AI space from a spending perspective?
Yeah, no, that's a really important question. And look, I mean, one of the great things about North America is we know how to build things. We know how to raise capital, and we know how to build things quick. And so we've seen this again in the concept of, if you go back 20 or 30 years, you've seen that with fiber optics, you've seen that with the overbuild in the internet. But at the end of the day, it's up to investors to decide, when does this hype cycle become too much, right? Right now we're still in growth mode. The valuations are obviously getting a bit rich at this point. But look, I mean, I think there's still room to run, and I'll give you two basic reasons on why, right? I mean, I think the way the stock market is set up these days is different. The vast majority of capital comes through ETFs right now. And so it really now is a function of trying to figure out which pre-IPO company will neatly fit into an index once it is public. And look, we both know this. Once it's public and once it's got a weighting on an index, every ETF is a forced buyer, in which case that valuation is going up before it comes down, right?
And who do you see everybody jumping at this when it does go, assuming it when it does go public, or will there be people that may step back and wait and see?
Yeah, so again, it depends on who's jumping in. So if it gets added to something like the NASDAQ 100, every ETF tracker is a forced buyer. Like they have to buy it. They have no choice. And it doesn't even matter what the valuations are. It could be $1 trillion, it could be $2 trillion. They're still a buyer, right?
And then when you think about the nuances of this company, they just recently also had the transaction where they went from a nonprofit to a for-profit. Does that make it more challenging for the IPO, or has that been basically resolved at this stage?
Yeah, no, I think that's what made the impetus to do the IPO. Because before, I think the capital structure and the corporate structure was just too complicated to take public. But now that this is done, I think it's a much easier road and a much easier process for them to go public.
And with Sam Altman, where does this leave him? Will he I mean, he had these ambitions, I think, to do good. Will he still be able to, do you think?
I mean, I think so. I mean, at the end of the day, I mean, making him wealthier isn't going to make him do bad all of a sudden, right? I mean, like, if his intentions were to do good, I think more money will help him do good, right?
So you don't see it changing the direction that kind of he has for OpenAI?
I don't. If anything, we always say this about, a lot of these sort of private companies, there are benefits to being private, but once you do get to a scale where, it just becomes cumbersome to be private, right? So, at a $500 billion valuation, that's where it's valued at now. You've got thousands and thousands of investors. A lot of those are institutional or VC. And a lot of those guys are now going to start demanding reporting. And each company wants, or each investor is going to want different reporting metrics. And eventually that becomes a pain, right? Eventually you just sit them all down and say, okay, look, we'll go public. Here's one set of documents. Here's one set of rules we're all going to follow. And then that's it. Otherwise, you just have these gigantic departments pumping out reports that, are very individualized and don't make a ton of sense for the company as a whole. And the other one is, once you have too many investors, there's always going to be, investors that need some liquidity. And so there's always some trading that goes on. And so, if it takes you 4 weeks to get a trade done, it suddenly becomes very, very complicated. And so, there's going to be a huge impetus to go public. And that's why, when I heard the news that, they'll be going public sometime next year, it made a lot of sense for me. It's just become too big a company and too complex a company to remain private.
Nate, last question to you.
Last question is, there's a lot of owners here that are also going to benefit. So Microsoft being one of them, and there's also obviously the shareholders of the company themselves. How do you think that plays out? Is Microsoft going to be a long-term owner of this?
I think Microsoft will be a long-term owner of it. It makes more sense for them to have that strategic positioning. But look, I think, investors, on the other hand, they're going to benefit immensely. The nice idea of this thing going public in about a year still means there's a ton of opportunity for investors right now, at least the accredited investors, to come into this market and buy these shares before they go public. And so, I think there's a ton of value there for investors as well.
Okay. Jay, thank you for joining us. We appreciate it.
Absolutely. Thank you.
Jay Bala is Senior Portfolio Manager at AIP Asset Management. Still ahead, today's market drivers with Bloomberg's Divya Balchin.